Hello, everyone. I hope you're having a great holiday weekend so far, this 4th of July weekend. Things have gotten off to a bang on Maui already. Unfortunately, on Saturday, our landlines, phone lines, wireless, everything was shut down because of a huge fire around the Ma'alaya area, a 10-mile stretch of fire. They've shut everything down. Internet's still down, but 4G networks are back up, so I can make this video for everyone. So let's get right to it. The NASDAQ. What an incredible comeback following the Friday and Monday sell-off. Tuesday, Wednesday, Thursday, and Friday was nothing short of spectacular. But what was short of spectacular was the volume on the rebound. So if we were completely out of the woods, this is what I would have wanted to have seen. On Monday, volume larger than the Friday volume, even though that was all options or Russell 2000, Russell rebalancing, and Brexit related. I still would have wanted to see volume higher on Monday. Then I would have wanted to see volume even higher on Tuesday, and then whatever happened on Wednesday, Thursday, Friday, fine. But in all reality, when we look at the NASDAQ, we clearly see there's still June resistance here, and ultimately there's a ton of resistance at the 2015 highs. We are still in nothing more than just a range-bound market, like I continue to say, between these highs and between these lows. Until we break out of a range here or here, I find it hard to believe that we're just completely off to the races. Now, whenever we look at the NASDAQ and look at the NASDAQ 100, we can see a similar situation. When we look at the small caps, an exact same situation. Not sure why everybody is so bullish here. The Investors Intelligence Survey still has a ton of bulls, even post-Brexit. AAII is still in that same range, but I really saw no fear following the Brexit. A big jump in VIX, in one day. That was a huge move. But overall, I didn't really see any real fear, like compared to what we saw at the 2015 lows or the 2011, 2010 lows. So there's still a very complacent market. Now, that being said, when we move over to the S&P 500, we can see that we're near a breakout to new 2016 highs. But once again, overall, in the grand scheme of things, I once again don't understand why everyone is so bullish or bearish here. We are still in a giant trading range between the S&P 500, between the 2015-2016 highs and the 2015-2016 lows. So once again, until we break out above these areas on convincing volume and then see follow through, I don't see how anybody can be bullish or bearish, especially if you can be bearish with a break below the June lows for sure in any of these indexes. Until we break out to new highs, it's going to be really hard. Now, the good news is, on the New York Stock Exchange, even though everything is volatile, range-bound, nobody should really be bullish or bearish here, there were a ton of new highs the past few days, and I believe I saw somewhere that the NYSE new highs are over 600, and they're hitting levels not seen since 2010. And if you remember, after 2010, besides the scare in 2011, we had the 12, and the 13 was the only really good uptrend. 14 wasn't too shabby. 15 started out good for us, but ended the year terrible. But, if we can see, most of the times when we get these new high expansions in New York Stock Exchange, uptrends are around the corner. Now, we're still in the summertime, seasonally, very bad period of time. So that means we could easily be range-bound throughout July, August, maybe we rally in September, more than likely the later weeks of October. But until we get to that seasonally bullish period of time, to think that the market's going to explode higher or go lower for sure is absolutely insane. So keep a neutral stance. That's where all of our models are back after the retaking. That was a quick switch. We switched from buy signal to a neutral signal to a sell signal, right back to a neutral signal on a matter of a little over a week, or right around a week and a half. So our models are doing this because we're range bound. It's not like our models are switching all over the place because we're in a trend. If that was the case, there's something wrong with our models. This is characteristic of a range bound market. Everything, they're operational modes. So it means when we switch to a sell signal, it means, man, to pass my long criteria, it's got to match everything. When we're under a neutral mode, I give things a little bit more leeway. I'm willing to chase 1 or 2% if something's a little extended, or maybe buy a little bit larger position. And under a buy mode, I'll go 20% one new long position if we have something like that. But right now, we're not in that situation. We're just really treading water here. It's summertime. I assumed that we've only started with the massive volatility. I didn't think it could get any worse than what we've seen, in 2015, 2016. I mean, these moves here were insane, but in a much shorter period of time, that was pretty insane what we just saw the past week. So interesting times to say the least. Now, the good news is, since we're rule-based, we are still in some of our long positions like EBIX. My final sell stop was a move below these lows. That never happened. So we're still long EBIX. But some stocks like UFPI, UFPI, I made a mistake. I moved all my final sell stops to this point. Should have had half here. Should have had half here. Didn't do that. So instead, I got shaken out of the position, and look what happened. It's right back. But luckily, UFPI is one of the few stocks I did that on. So even despite the selling off, we were still right around 45 to 50% invested on the long side throughout the margin and cash accounts. It was great for our positions because stocks ended up doing very well. ROIC, for instance, moved up the sell stops to this low here and this low here. That low around the 50-day moving average on 624 held, and look, we got new highs, and that's why you obey your stops and not your feelings. If I had been going off feelings based on Brexit, I probably would have sold out of everything. Instead, I let my stops take me out or keep me into whatever stock was working or not working, and by the end of the 2 days of selling off on Friday and Monday, I was still right around 50% invested on the long side, and for now, that's paid off. Nothing says, though, when you have moves like this, V-shaped moves on no volume, nothing says as a diamond expanding pattern starts to form here. So you can see how the trading ranges are kind of like it's kind of like getting wider as we move out this way in between the highs and lows of the uptrend. If that continues to happen, I'm sure that we can easily reverse that to the downside. But the new highs to the new lows, the stock market breadth this past week broke out to new highs. I saw on Investors Business Daily. I don't know what it looks like after Friday, but I saw the NYSE advanced decline line hitting new highs along with all of those new highs that are hitting 52-week new highs. So I don't see how more intermediate term that's going to be too bearish, but I could be completely wrong. This market's very volatile, so keep an open mind. Now, I have 0 partial sells, 0 full sells this weekend, and I do have 1 new higher quality long position, but it's an end of day commodity trend following signal. So really, this is a commodity signal overall on the commodity index. So GSG is bouncing off its 50-day moving average, while at the same time trading through its 20, 10, and 5-day moving average. Now the problem with this is I want this normally to go the other way, but we're under a neutral condition, operational, so I can take this trade as long as all 3 moving averages are touching price and the price is just above the 50-day moving average. That gives me a lot of support and lessens my risk. So GSG, it was in 3 scans, 1% under a neutral position for each scan. If it was under a good buy condition, operational condition, be 2% for each scan. This would be a 6% long position. As it is, it's 3%. First cut loss, 1548. Final cut loss on the entire position, 1502 if it doesn't work out. Now, under a sell condition, I probably wouldn't take this, or if I would, it'd be 1.5% because all the moving averages are touched. But normally, I want the 5 above the 10 above the 20, and all touching the intraday price range. So GSG is a good long signal. I'm also thinking, haven't decided yet, of taking a speculative position in GSS. Gold stocks have been very volatile, but GSS is giving a signal right near its 50-day moving average. And even though it's only touching its 5's above the 10's above the 20, which kind of lessens the risk with the price just above the 5. So I might keep it a little small position. It's only a 69-cent stock. Who knows, even maybe just a few $100s. I doubt I'll put even $1,000 into this name. But the bottom line is, I think I want to take a small position. Don't want to pay more than 70 cents for it. Final cut loss on the first half of the position was 65, and I would let it go ahead and ride out to 59 if I'm going to try to take a chance on a runner, which is why I would keep it so small. So if it closes below 65 cents, I'd be out of 3/4 of the position, with the remaining 1/4 of the position to this low a day if I decide to take it. But for now, all I know, GSG is the only one. 1548, 1502 are the final sell stops. I do not want to pay more than 1572 for this name, 3% position. Have a great rest of your weekend, everyone. Wish us luck on Maui. We still don't have internet.